Okay, g'day guys. Here with Trader Ferg, who's agreed to come on and have a chat with me, basically regarding options trading, stake, um, just anything. Just a good banter session. It's good to catch up. He's a good mate of mine, and lucky to have some of his time these days because he's so busy. So thanks, mate.
Oh, I don't know about that, Jordan. I've just got back from nearly 2 weeks off in Perth, so it hasn't been that busy. But yeah, good to be here.
Yeah, mate. Oh, it's actually like the perfect guest for my Substack because a lot of the guys who actually follow, a lot of you guys who are paying and following me, already know about you and are very familiar with what you do in your trades and how you like hunting for cyclical hated sectors and then trading some options on it for income. It's a really epic blueprint to that I'm lucky enough to have followed for a few years now, ever since, geez, almost. Yeah, from the first time I met you, it would have been six or 7 years ago now, I reckon, mate. Yeah.
Yeah, no, it's always a thing. Everyone expects quick returns, but all the stuff comes from grinding away at it. It's like with Brad and I have just ticked over 10 years now since I met Brad and been getting mentored, and yeah, there's no quick wins in this whole trade or whole skill set. Like it's you have to stick at it, you have to grind it out, you have to understand it, you have to take some pain, because I always say, like, no one really learns lessons until you get punched in the face and you're like, oh shit, I'm not going to do that again, after learning the hard way what happens if I don't follow these rules. So it's good to see, yeah, that you've just ground away at it and you are where you are now, and you picked the right spot in the world. I think Bali's no longer what it was for sort of geo arbitrage. Like, Jesus Christ, the rents, particularly where I am, it's like more expensive than Australia now. It's just silly.
Yeah, that's it's exactly why. Like, remember when I quit my job, I went back to Bali because I'd missed it so much after COVID. I remember catching up with you, and just doing a couple months there, and just couldn't believe how expensive it was. And I wanted to sort of get into options trading, and this is when I was learning, and you pointed me in the right direction. But yeah, it just wasn't my thing anymore. I lived there for, I think, 4 years, and obviously that's how I met you. And then when I returned, I was just like, I've got to go and do some traveling and find somewhere else to live, and try and keep my mind busy, because I was just coming from like an intense job as an underground geologist, and I didn't want to just travel and do nothing in Bali. I wanted something to focus on. So that's how I found options trading through you. And yeah, I sort of thought it was a little bit of a secret recipe to learn and yeah, something I could focus on. And then yeah, moving to Argentina now, it works so well. Like US dollars, dealing with US dollars here is just an absolute. You can have the best life you could imagine, like eating $10 steaks most days, as a lot of people have seen on Twitter. And yeah, I can just arbitrage the currency so well, and yeah, I think my overheads per month, I worked it out the other day, it's something like less than $2,000 a month, including rent, including bills, including eating out every other night. So it's
fantastic. Yeah,
a great lifestyle.
Yeah, no, couldn't do that here anymore. Like it was, but when we first arrived, really, would you spend over $100 going out for like a night? I think we had the one fancy place that would go every Friday, the Lawn, and yeah, if you did a few rounds there, you'd get over 100. But now, like Mia and I just go in for a casual dinner. Most places, yeah, 100 easy. Cocktail here, sort of equivalent of pretty much 20 Aussie dollars.
It's just bottles, isn't it? Yeah,
yeah, it is. So it's all, yeah. I don't know how it can keep this pace. Like it's there with all the Russian influx, and no, so you've found yourself in the perfect spot.
Yeah, so it's definitely no secret here though anymore. It's the currency's been in trouble for, I think that they say, about the last 5 years, and it's just had this influx of the Americans. So they call them Shankies here. So there's so many Americans.
Shankies.
Yeah. Oh, Spanish. So Argentine Spanish, mate, is just like a complete separate thing on its own to actual normal Spanish. So they shush everything. So double L, they have their own way to say it. They just go like shush, and for a Y. So a Yankee is a Shanky. So it's it's a completely bizarre language to learn. I still am struggling with it. It's going to take me a while. But yeah, and they're literally everywhere here. So I walk through Palermo, which is like the Gringo district here. It's quite big, but it's where all the old buildings are in Buenos Aires. It's beautiful. Looks like Europe. Looks exactly like Europe. And it's just full of Americans opening businesses and co-working, digital nomads. And yeah, you hardly see an Australian. Like they're literally zero Australians here, which I find a bit strange because Australians love to travel. But I think it's just a little bit too far. It's just so far away and so inaccessible here, and expensive to get here. So I think it turns a lot of them off. But yeah, it's definitely it doesn't have the feel of Bali or anything like that. It's just a completely different traveler and expat, or yeah, I guess you call them expats. So yeah, it's a complete change up from what I was doing for all those years in Bali, mate. There's no beach for starters. Just that's me. So we used to surf all the time. We'd be down at Rawa or Echo Beach surfing, and yeah, it's part of my lifestyle. It's just no chance over here unless I go to Brazil. But even then, I've traded it for mountains. So every little holiday I do, I just head out to Patagonia, just jump. There's an airport that's really close to where I live. It's literally like 10 minutes in a taxi. It's so handy. You go there, you just jump on a very cheap flight. You geo-arbitrage the currency to pay for your flight in cash. So it works out to be just like getting on a bus almost. And then you're in 2 or 3 hours, and you can have a good time hiking around there, or hiring a car and driving around past all the glacial lakes. It's just a complete change up from what I was doing in Bali.
Love that. Yeah, it's my one big regret's not I never did any of South America. The lowest I got was to Cuba.
Mate, you would absolutely love it here, especially because of all the steak. I know you got me into the steaks in the first place, because I just saw this dude who's just like working out, super fit, and then saw you just eating steaks all the time, and that was it. And I was like, how is this possible? Like, it just doesn't make sense. Like, surely you're gonna have like health issues. You're like the healthiest dudes I know. Just throwing up like 50k kettlebells above your head. I was just, this is absolutely crazy. And then I remember trying it out and just being like shocked at how good you feel, and how much better you feel off it, basically. And then I've carried it over to here, which is the most perfect place for eating meat in the world. And it's a shame you haven't made it over, mate.
Yeah, well, it's costing me a small fortune to maintain it here. Yeah, I even had a joke the other day when I went to the local butcher's, and the same lady serves me every time, and it's got kind of awkward now because dropping a decent amount on like a big package of good steak, and she's like, "Oh, you having a big party?" And I was like, "Yeah, yes." Like lots of people, and then she sees me come in like a week later and order again, another big party. Yeah.
Wine customer, mate, no doubt.
And my wife, like Mia, she still jokes because she was pretty much vegetarian when we met, and I gave that sort of a crack and didn't sit with me. Just just uttered the whole time and felt like shit. Well, wasn't my sort of makeup. And now, slowly, as without really pushing it on anyone, got like all my mates starting to take it up, and even got one mate in particular, just spent time with his girlfriend was dead vegan. She's now on it. So, slowly converting. Yeah,
it's absolutely taken over. Yeah, like I can just keep saying, mate. Like here, you just don't get any serving of steak under 400 or 500 grams every time you go out. It's just like,
that's amazing.
Coming from Australia, where you get you like max 250, 300 grams steaks. You come here, you get portions are just epic, and it's so easy to do. You just go to the gym, and then you just walk past a parisha, which is what they call it. It's like a grill house. They're just everywhere. They're on every block. Like, they're old restaurants, been there for years, and then just have this like 500 gram steak straight after working out. It's a great life. It's perfect.
Very jealous. I should have got there, but now traveling with the bubs a little bit more difficult. And you find the whole time you're just traveling to see parents at the moment. They're kind of trying to lock in. They're both trying to lock in a trip for the year. So by the time you've got a few trips to see them either side, her parents, my parents, yeah, takes up a lot of the travel time.
Oh yeah, I imagine there's all your holidays pretty much there, probably, mate. Yeah, yeah,
exactly. Yeah.
Oh mate, so this how have you been? Do you even trade many options these days, or are you sort of just, I don't know, working on other sources of income, or is it still your bread and butter, or are you are you doing other things?
No, so I do still do it, but I'm just quite selective of what I do. So I'm like I remember when I was in your stage, I'm like making it work every month. So I'm taking like every setup. So an example might be like, if I don't know, if I was looking for that few grand a month to make sort of income meet expenses, then I'd be willing to accept like a little bit less out of the money and write on a whole lot of stuff. Like the likes of like Peabody has always been sort of a corner, because inherently that was a win with me putting in a smaller position, that really growing and being able to write off quite a large position in the end, so produce a lot of income. But with that, I would just write maybe like 5-10% out of the money to make sure I got hit. I'd be sitting on the bid a lot more, whereas now my style's kind of, I'm like, if it just ticks up to this range for even a few minutes on this trading session, then I'm going to put like a large covered call to get filled there. Yeah. Which I'm starting to look at doing it again, because I'm just thinking Whitehaven's crazy here, so I can take more risk with riding heavily on Peabody, because if I do get exercised, I'm happy to kind of buff up the Whitehaven position. And
yeah.
So yeah, like to pretty much to answer your question, like I'm now mostly sitting like quite a way out of the money, probably like 15-20% out, and just happily sitting there hoping to top tick like the sort of the trading range for that period, so that I don't get exercised quickly and get a nice slab of income. Yeah. And so yeah, I've done that. I've done that trade so many times now. I've paid off my entire original cost base in Peabody over time. With just getting hit on these, because I'd say I'd probably start with like about a third of my entire position, sort of 15-20% out. When that gets hit, then I'll put another third slightly above that, so another few percent higher. If that gets filled, then I'll put the last on. So by the time I got the full covered call, the moves kind of usually got pretty extended. Yeah. And that's how I've done it. So it's far more selective. I love coal for riding covered calls, because you don't get the crazy moves. Like, it's just the idea of riding on stuff that jumps all over the place, like kind of trying to ride on like offshore. It's just too much stress, too difficult, honestly, for me. Like, I'm just like, I look at it and seeing like Transocean just like happily like jumps up a few percent for a few weeks and then gets absolutely trashed for another few weeks, and then like I don't want to worry about my position getting exercised. I want to sit on that. So that's in the too hard basket. I honestly think coal for income, because of the lack of like surprises, like it's almost sort of the anti-value trap, because you're going to get so much of the returns from like buybacks and sort of just cash flow. Like I've got a chart that I run in trading economics where you can compare coal to some of the underlying, like you can compare it to Whitehaven, and it just trades in line with, it's kind of like trades in line with the coal price. Yeah. And so you inherently reduce the risk of getting exercise, which is, it's just a pain in the ass most of the time, especially if you want to be in the position. And you've got to be so careful with some of these, because when they run, they can really run. Like uranium's a perfect example. Like if you miss like a month or two there, like it's just, some of these positions could just do like 10%, like day after day after day.
I was going to ask you about the stage I'm at with options trading, because like I said to everyone, I'm kind of using your your like journey as a bit of a blueprint for myself. And I trade options currently right at the money because I want the premium associated with it, and I'm trading on those stocks that are highly volatile, like the Transoceans and the Peabodys to an extent. But yeah, I'm trading right at the money, so I am getting assigned sometimes the options trade, and it is exercising me out of the position. So I was going to say, what advice would you have with that approach for me now? Like, is that like way forward really, or is
it's honestly fine if you. So that was my entire like I've always been clear that I had an income portfolio, not a long-term portfolio. What's happened now is I've just got one big long-term portfolio with some income around the edges. So if I were to go back to making my full-time income from income trades, I would separate it out again. And you should never beat yourself up about getting exercised away if you're like earning the premium. Like that is the point of that account. Like if you go in and earn, I don't know, 3% on Transocean and the thing jumps 10%, so be it. You locked in your 3%, and that's fine. If you're that scared of missing the upside move, like there's various strategies you can do. You just obviously replicate the position in the long-term portfolio and don't trade against it. You can have options that you can work out the notional value of Transocean so that you kind of be more efficient with your capital. So you could have like Jan 26s, have a decent position there that would match your like nominal value in your trading accounts. You've kind of got to call it like a placekeeper for that capital, because you could exercise those options in the future and like reinstate your whole position. So I did that occasionally when I knew there was a risk of getting kind of knocked out of the position. So that's a good way to kind of keep exposure. Having positions you can jump back and forward between. Like I love like the interplay of like Peabody and Whitehaven. So you could go back and forward. Granted, the Whitehaven option market's pretty average, but you can, if you're always kind of like understanding that a position isn't the perfect way, the only way to play like a sector, you can get exercised out and go across to another. And so at some point you're just trying to smooth the ride, because that's the problem with income is there's great months. There's months when you actually knock it out of the park, but what you want to try and avoid is the long downturns. And that's what I had it with my AX strategy was I like absolutely killed it for long, decent periods, like 6 months, even a year. But then I'd go like the equivalent period without almost earning anything because the market would like pull way back. And
not the exact same thing, mate. Like it's just something I always tell people. It's never just one like linear ride trading options. You're going to have months where you don't make much at all, and then you're going to have months where you kill it. But you've just, for me, like it goes back to your investment thesis and your long-term outlook on the stock and the sector it's in, and how you feel about that, just to get that conviction and just have confidence that those stocks are going to perform well in the future, and you're going to have another opportunity to write some income. What else would you suggest for someone starting out, early days options, which I know a lot of subscribers are? They're just starting out with covered calls and cash secure puts. Were those your two go-to strategies early with the AX, or was it?
So I have never done cash secured puts because it always annoyed me the amount of margin it took up. I started with just covered calls, and the way I made more with covered calls when I was starting was just being super active around some of the more illiquid stocks when they get close to strike prices. There's something beautiful that happens when you have what was previously a big company gets right down in the sub $10 range, and then it trades near like a random strike price, like I don't know. There's some examples like a like obviously Peabody, when it got right down there, it's run a lot more now. So some of the ones I've been looking at recently that I probably would have done going back, is some of the bigger silver miners. Like they still have great option markets, and there's fundamental value there. So some of those might only have like I don't know, one I think I looked at the other day was CDE, and that was I haven't actually looked at the option market on it, but like say for example, it has like, I don't know, $2.50 strike, $5 strike, $7.50 strike. When it gets to that $2.50 strike, there's a period there where the premium will just be ridiculous because it's so rare that it lines up really well with a strike. So I remember doing that quite a lot in the early days. You could make sort of 7-10% a month by just having when they really line up the strike. So to sort of diversify, like if I was wanting to make great monthly returns and do a lot of work for it, I'd be hunting out like those plays. I'd be hunting out the likes of like Denison's got a really good option market. When that lines up with that $1, $1.50 or $2 strike, hitting that hard. Some of the dry bulkers have got good option markets, and ideally you get in just after there is a big smack. So the way implied volatility works, it's pretty simple really when you think about how they do it. It's just the range that a stock trades, like open and close, taken over time and then averaged. And so if you have a big smackdown has just happened, then that blows out the implied volatility. And if you're trading quite a short time frame, especially if you can get something on a weekly, you get like a hell of a premium there. And so you've got a good chance of a snapback. It's why it's so hard to make money on the long side with options. If someone gets smacked, it's because you get vol crushed trying to play the bounce. That's why I sometimes do it with kind of like bull calls, because doing the spread, you kind of subsidize yourself with the further out of the money call will be more expensive. So that would how I'd go about doing it safely, because I've always put like being able to sleep is well and not be worried about like fucking margin. Like you only have to look. I had a few experiences with seeing a few of the companies. They when you most want to be writing premium on them, it's when the broker often plays around with the margin the most. Like I've seen some margin levels go from, I remember Ontario Resources, that went from like 20% to like 80 in like a space of like a month. So if you were trading margin on that, you just get so hurt and you have to put up so much more capital. And it's just, I think ultimately that capital, that extra margin you have to put up against what I've just mentioned, that's got quite a heavy drag on returns. Like my AEX portfolio, I was like working the capital so hard. That was how I made a lot of my sort of my money early on, was just shifting money from that across to the long-term portfolio, and just had a really good run of that working. But that trade's kind of dead now. I wouldn't do that trade, especially with the way the market's working. I think you want to get as far from indexes as possible, the big broad indexes.
Yeah, right. That's interesting. So were you trading that on like a weekly time frame, or was it a monthly? Was it monthly options, or was it just, or even a couple of days? Like how was it
for the AEX?
For the AEX. I was just curious about that.
So that's just an interesting setup, because the AEX is super weird in that for some reason you can go out years in the future and it's like as liquid as like US options on a 1 month time frame. Right. So what I was doing with the AEX was when I was like deep in the books with options. It worked out I could pretty much create a synthetic like long position that would be pretty much the same as owning like stock or owning the index. So I just go deep in the money with the long call until I minimize time value. So I could go like out 4 or 5 years in the future, go deep in the money, and then it moved not exactly the same. There was always a bit of slippage, but moved more or less in line with what I was selling at 1 month. I even dialed it in so much I was more or less covering like the weeklies. And granted, this was like a full-time job, I should say. I was living in Berlin, so I was trading from the open right to the close, and I was doing weeklies, and that was starting to knock out like that was like 5% a week on like a big account at the time, like a big position. The count wasn't that big; it was just leveraged. And IB also dialed up the another reason why it doesn't work as well is they dialed up the they put like they call it like a illiquidity premium on the long options. So they require even more margin. So the margin like doubled since when I started doing it. So you need to park a whole lot more capital. So yeah, it was just a period of time where that worked. And there's a lesson in that as well, is that like most stuff doesn't work for extended periods. As soon as something works really well, it people jump on it, it gets arbitraged away. They it gets removed. It's kind of like all the cyclical stuff. It's the place to be now, but give it another 5 years and I think I have to talk about something else, because
it's a temporary.
the train's already leaving the station now as we speak. Like everything, there's no bottom crawlers anymore, really. Maybe some of the silver stuff at the moment, but yeah.
No, it's interesting. One thing I've found that's worked for me over the last sort of couple of years, I've been trading 18 months, is trading around earnings, because like quarterly earnings, for instance, like especially Peabody last year and leading into like winter for Peabody last year, and even with Transocean, you can get kind of a consensus at where they're roughly going to be. And I've dated options to expire just after them, and it's actually worked quite well, especially with like the increasing offshore day rates and the increasing positivity of the sectors we've been investing in. So yeah, I've aimed to have expiry dates dated after then, and it's worked out well as the sector's recovered. I don't know if that's anything you've ever thought about doing, or it's just
it's a bit reliant on luck. I think you've probably caught the trade well with Peabody because they've had all their fixed contracts rolling off, so they keep surprising to the upside over time. So, but like as a general like way of playing it, I never like that, because you kind of position yourself for like you'll have stocks that completely shit the bed and you'll be holding just as that happens. So I usually prefer to try and miss the big earnings. Granted, you could earn more around them. So I never felt like I had much of a edge around that, even though I understand you can earn quite a bit more with the volatility.
For example, like when the Newcastle coal price last year was just high as hell, it was in 400 or something a ton, and then Peabody were going to announce earnings at a date, and I'd set the expiry to be after, and I'd sell puts on it, and it actually, like I think it could be a lot of luck as well, but I kind of thought that it's where it was trading at the current time with the improving fundamentals and the good earnings release, it would be like kind of a little bit less of a risk off trade. But yeah, it's just something I noticed that worked for me a lot last year around the sector fundamentals improving. But yeah,
well, it depends how high the vol gets as well. Like I always harp on about volatility, because there's times when it's just priced wrong. Like it's just crazy. Like there's you can actually be sort of bearish something, and you look at the volatility and you actually want to sell that volatility. Like I always used to use Tesla. Like I've always thought that company's like a dumpster fire and gonna eventually have to be revalued in line with other sort of auto manufacturers. But every time I go in to look at shorting it, like the long dated puts, you're like, I almost want to be selling these things, because even if it goes bust, it's like it's a shitty payoff. It's like a 3x payoff. So if you sell them over time, those are just going to be absolute money printers. And it was just because so many people were in the market that didn't know what they're doing, and they were just paying through the nose for vol. So it's understanding the role vol plays. I always say like vol's probably like 2/3 of the game, and the actual intrinsic value is like a 1/3. But it's also so hard because we don't have great measures of vol, like unless you have a Bloomberg and you could do like the whole historic
Practice.
what Vol's done historically. So you got to get a feel for it, and then explaining how to get a feel for it's hard as well, because every stock's kind of individual in their Vol profile. Like something jumping everywhere, you've got to then have a really strong, like rig would look terrible if you didn't actually know what the underlying business was and was looking improving. Like you'd be horrified trying to hold that and it jumping all over the place, going up a few bucks, down a few bucks. Yeah.
Yeah, no, interesting. I noticed there's like a bit of a split between what I do, trading options, and the tech traders like your Tesla, all your tech stocks. They seem to. A lot of people don't realize the amount of capital you need just to write like one covered call on Tesla. Like you need to buy into the stock, then write the call, and your one contract is, what is it now, $240 a share. So there's 24 grand you need to write one contract. So I get questioned about starting off options and trading those sort of stocks all the time. And it's just, to me, it just sounds super risky. Like I remember you gave me some advice that was to focus on stocks that, are under $10 and then build up into other stocks if you like them and their future outlook. But yeah, I get a lot of questions of people asking that, like, do I start off straight away by selling like Tesla and tech stocks that are really expensive and the share price is high? And it's just, to me, it's just like it's a silly question. And yeah, I think that's where like what I do and what we do is like focusing on those cheaper stocks. It's a good way to cover your risk and a good entry point to options trading.
Yeah, well, like as you rightly say, like it's always been my recommendation. I always say, like, go and do all the option alpha free stuff. Like that guy's put together so many great resources and got such a quality YouTube channel. And then once you've done that, like there's that point of like diminishing returns of like just get in there and do it with a small amount of capital. Like just as you're talking, I just brought up that one. I couldn't remember the option market. So the CDE, Couture Mining, could do less than a month out. You could put $250 down. Like the stock's trading at $2.48, and there is a 250 strike. So yeah, the strikes go up in 50% increments. So last price was 17 divided by 248. That's going to be a nice. Why is that not? Yes, yeah, earnings pretty much 7% for less than a month on that. So those are the sort of ones where like you want to learn on that stuff. You're going to make obviously with $250, you're going to make $17, probably a bit less after brokerage. But you just doing that and getting started and getting some confidence, like having it exercised on you, having it expire on you, having it like once you've done this whole process a few times, like it just gets so much easier because it's not scary. And the great thing with trading is as you scale it, you don't have to hire a whole lot of staff and do a whole lot more work. It's just a few extra clicks. It's a few extra zeros instead of buying just 100 shares, you're buying, I don't know, 10,000 shares. It's like a few extra zeros and the same whole process. Nothing changes. Yeah,
it's a superpower, I think. Like I think, every investor should have an idea on just basic options. In my opinion, it's just a great tool, even if you're working or whatever you're doing back home. It's just a powerful tool to check and see if you can make some income off a trade. And there's a few $100s without going to work for someone.
Yeah, well, it's also like even without the income side of it, it's just a good way to kind of like rebalance between positions. Like I kind of use it to, if I want to lighten up one position, like I was saying before with Peabody, I'd probably slightly more bullish on Whitehaven. So right on Peabody to, with that in mind, that if I get exercise, I'm just going to reallocate that capital across. If a position's just done something absolutely crazy, like just done a few, I don't know, 15% days, and I just feel like that's silly. It looks like it's peaking out, and you can turn it all into a covered call. Like it's just fantastic. Like I love that that ability to kind of game over sort of just too much enthusiasm, and you can just play that as well, and you often get paid with vol as well when it's just done some crazy moves. Vol inherently rises, so you get rewarded for taking the other side of like too much enthusiasm. Like I've got this whole, it's like it's always interesting, like the with my following is people that actually get the idea that you've got to go into hater stuff, but then there's also people that are holding off doing anything, and they'll just go in when it's absolutely peak. Like I call them like the what was it, November 21, like uranium crowd, like refused to get in the trade until until it was so comfy. Everyone's shouting, everyone was happy, and they like literally top ticked it. And now there's like one guy in particular on Twitter that just follows everyone around telling how he lost money on his whole uranium portfolio. I'm like, how the hell did you do that?
It's just human.
Just not prepared to pull the trigger until it was completely obvious and everyone was patting you on the back, and that's when you get punished in the markets. So
it's like that with everything. Like you could relate that back to Aussie housing so well. Just like popped in my head. Like that's what all my friends have done. They've just bought into this like raging bull market, and it's never corrected. It's just keeps going, and they just think they're just like epic investors and they figured it out. But it's just they're just doing something that's so comfortable within our society to do. It's just like, oh, get a job, buy a house, because everyone's doing it. And it's like there's no take into account like the actual numbers in the background of the Aussie housing market. But it's
you got to worry when everyone agrees with you. Like it's should look back at some of my early coal videos, some of the first interviews I did. I remember, I think it was with Jake, what was his name? Jake Ducey or something. Like when I first mentioned coal, one of the first comments that popped up were like, "This is the equivalent of pillaging Jewish houses during the Holocaust." I was like, okay. I was like, my fault for reading the comments, but
it's so fun. Oh yeah, no doubt, mate. You were super early to that. Jeez, it's one trade I didn't follow you into in the early days. I followed into uranium, but coal was one of the ones I was like kicking myself, especially Peabody when you're raving about it at $1.
It was interesting then because I couldn't sell anyone on it. Like I couldn't bring anyone around to it. I was trying to convince Matt Gordon for like nearly 2 hours with that whole presentation, and at the end he's like, "Yeah, I kind of get where you're coming from, but this isn't for me, and I'd never touch this." I was like, "Okay."
You would have the street cred you would have got off him for that. That's insane. No, mate, it's all very interesting stuff. This conversation, mate. I don't want to keep you too long. This is going to be a monthly catch up if you are happy with that, Ferg. But
100%. Yeah, love these. Yeah,
great.
Hear more about steak and steak and Argentinian life. Yeah,
it's a great insight. It's like I keep saying, I follow Ferg's blueprint very closely. Just doing it on the other side of the world, and I think it's going to add some really good value to the Substack as well. So, thanks a lot, mate. I really appreciate it.
Thanks for having me on, and look forward to chatting regularly, man.